Can a Canadian citizen and resident with no other U.S. tax ties be subject to the various U.S. income tax regimes? Simply, yes. The two most common factors that may expose Canadians to U.S. taxes are time spent in the U.S. and ownership of U.S.-situs assets. Let's take a look at time spent. Canadians, including Snowbirds, may be considered U.S. resident aliens if they spend too much time in the U.S., requiring them to file U.S. income tax and information returns. There are two 183-day tests to consider. The first, which is very common and most are aware of, is spending 183 days or more during a given calendar year. The second is the substantial presence test. If a Canadian spends 31 days or more in a calendar year and 183 weighted days or more during a 3-year period, which includes the current and immediately preceding 2 years, and collectively it's over 183 days, they've demonstrated substantial presence. Spend less than 122 days per year or 4 months to avoid exceeding the 183 weighted day test. Keep in mind also what counts as a day. It's any portion of any one day that counts. For those Canadians who have exceeded the first test, they may be able to claim an exemption under the Canada-US Tax Treaty by filing Form 8833, which is a treaty-based return position disclosure. All applicable U.S. income and information returns still have to be submitted. You may not have to owe the tax, but you still have to file all the U.S. returns. For those who've exceeded 183 weighted days, by filing Form 8840, the Closer Connection Exception Statement for aliens, a Canadian acknowledges the substantial time that they've spent in the U.S., but attests that they have stronger residential ties to Canada than the U.S. Stronger Canadian ties would include, but are not limited to, principal residence, personal belongings, bank investment account, wealth ties, earned income, established memberships. The second aspect is if Canadians own U.S. situs assets. So what are U.S. situs assets? Real property, tangible personal property, U.S. securities, those that are traded on U.S. stock exchanges or ownership in U.S. private corporations. Cash accounts with U.S. brokerage firms located in situ in the U.S. Certain U.S. debt obligations, U.S. mutual funds, including money market funds. Note that these are U.S. situs funds and are not Canadian funds that are traded in U.S. dollars. In 2023, if a Canadian has worldwide wealth in excess of $12.92 million U.S. dollars and owns $1 of U.S. situs assets, they'll be subject to U.S. estate tax. Worldwide wealth includes all real estate, business interests, financial accounts, insurance ownership, etc. Take note that the Unified Credit changes annually, and it's anticipated to drop substantially in the next 3 years, meaning more Canadians may be subject to U.S. estate tax based on owning U.S. situs assets. We at Wellington-Altus ask questions, particularly when it comes to exposure to the U.S. tax regimes, and have recommendations to minimize such given a client's particular wants and interests. Hope these points resonate with you, and remember, you don't have to be the expert here. If you have questions, please reach out to your Wellington-Altus advisor.